how do you size your positions accordingly, right? How do you size your positions accordingly? And I'm going to go over two examples, right? My favorite, the trades, the most popular trades right now, you can find them on Tradespoon, right, under Elite Circle. Let's go back to, trades that was well executed and maybe not so well executed. So again, there's two ways of trading in this market. One, you can do just ETFs, right? You don't want to take individual stock risk, right? I thought Microsoft is going to be great. I was bullish, and their earnings was disappointed. I thought Apple was going to sell off, but earnings were better than expected, and it rallied. So you basically can sell iron condors, right? You can sell premium, right? Everybody talks about small size, selling premium. So this is an example of XLK where I sell premium, right? I sold 118 put for 52 cents, right? I closed it for 13 cents, was able to collect 40 cents. I sold 129.5 call for 56 cents, and I closed it for 10 cents. So 56 plus 53, let's call it $1.10. I hedges, closing positions, another 20, 30 cents. So 80 cents. So I was able to collect, 70 basis points, 70 basis points in 1 week on the ETF, right? And the idea, as long as XLK is trading in the range, right? As long as XLK is trading in the range, right, somewhere between 123 and 130, I'm continue collecting the premium, right? Continue to collecting premium and selling out of the money premium. You might say, Vlad, okay, you made $70 on this trade, and that doesn't make or break or change my life, right? But let's say you do this every week and you can collect 0.5%, right, on this strategy, right? So if you can collect 0.5% or 1% in 1 week, right, by doing this weekly, cash secured option wheel, right? You're selling, think of it as selling naked put, getting a sign, selling call, right? So option wheel strategy in 1 week, if you can make 0.5%, then in 4 weeks, you can make 2%, right? And in 12 weeks, right, you can make 24%. So 12 months. So 1 week, 4 weeks, 12 months, right? So 24% in a bear market, you're a superstar, right? So if you're new to trading, or if you don't have a well-defined trading plan, or you don't keep a journal, I encourage you to do the following. Target maybe 0.5% again a week. Trade, you can just trade XLK in this instance, make 0.5% a week. That's your target, and try to, at the end of the year, beat up 24%. If you can do that, you are, you should give yourself an A at the end of the year, and maybe next year, or in 6 months, once you feel more comfortable, you target maybe 1% or 75 basis points, right? You can see the math. This, you instead of 1 XLK trade, you do 2 XLK trades. So instead of 1 contract, you do 2 contracts, and then all of a sudden, this is 1%, 4%, and 48%. But you need to build this process first, and it takes time, right, to internalize this information. So I encourage you to, 1, always journal, right? You always want to journal. 2, you want to always participate in live trading room, right? You could be a paid subscriber and participate in every live trading room, or you can go on the YouTube, right? You can go on the YouTube without any financial commitment. Right, without any financial commitment, every Wednesday morning bell and closing bell. And as long as you participate in a live trading room, right? So this is the recipe. You journal, you participate in a live trading room, right? You look for 0.5% gain a week, right? By selling these out of the money premium. You keep 50% of your portfolio in cash, right? You keep 50% of your portfolio in cash. You keep, 4 positions at a time. You're not risking more than 2.5% of your portfolio account value per trade. So step 1, 2, 3, 4, 5, 6. If you do these six items, you do them every week at least. Sometimes I understand you can't be in the live trading room. You participate in YouTube. You can participate live, or you can just subscribe and be part of and just watch the recordings. You do this for 3 months. I'm gonna make a claim that your performance will dramatically improve if you did not do these things in the previous 3 months, right? So just pause for a second, do these visual exercises, go back to the previous 3 months, write down how you did in the past 3 months, then follow these steps, and then write down how you did after those 3 months, and just compare the results. I'm gonna make a statement or claim that your performance is significantly improved. If it's not, I encourage you to send me an email, tell me what you did before, what you did after, and maybe I can help you figure out, where consistently you're making a mistake. Usually consistently making mistakes is not following one of these 6 steps. Either you have too many positions, or you don't have 50% of your portfolio in cash, or you're risking more than 2.5%, right? Your position size is too big. But I encourage you to follow these 6 steps. Any questions? Okay, so now let's go over some of the good examples where I actually did well, right? So this is an XLK trade. So I did well on the ETF, close, collect the premium, still in the trade, right? When the trade got very close to my short call, right? To the short call, which was 129.5, I bought 50 shares to hedge. So now I'm in cover call, right? I still have stock at 128.13. It's trading at 128.61, and I'm repeating the trade into the midterm elections, right? And into the Fed meeting by selling the 129.5 call. XLK is up 4%. That's impressive. All right, so that's the setup, right? That's the trade. And the size, notice the size, right? Sometimes, you sell 129.5 call, and sometimes it expires worthless, and sometimes it might not expire worthless, right? So then what do? The way to hedge it, you have to buy a stock. So I encourage you, when you trade in options, always, you might have to buy a stock or you might not. That's irrelevant, but you need to figure out the position size, and you figure out position size by translating how much money you're managing. So if it's a $128 stock and I buy 100 shares, right? That is roughly $13,000, a little bit less, right? So I'm managing $13,000. I encourage you, if you have $10,000 portfolio, I think that's okay. If you have $10,000 portfolio, it's okay. XLK is ETF. Maybe the trade will go against me. I'm down 2.5%. I can limit my losses to $250, right? If you trade in, let's say, Microsoft, same example with Microsoft, and the trade is going against me. On a $10,000 portfolio, if the trade goes against you by the stock moves by 2.5% above or below your level, then all of a sudden you're managing, same example, you're managing 238 times 100 shares, right? And you're managing $23,000. And on a $10,000 account, now you have $23,000, and Microsoft moves 2.5% against you or 3% against you. Now you're not down $50, you're down, $600, $700. So I encourage you to always trade stocks and ETFs or asset classes where, when you translate it into equity value, it's always the same size. You always trade around $10,000, right? You can buy a stock for $10,000 if you're day trading, right? If it's a short-term trading, you can buy a stock for $10,000, or you can buy one contract of $100 stock for, $10,000, or you can buy 10 contracts, right? You can buy 10 contracts of a $10 stock, right? it's the same, right? If you buy Ford, okay, then you buy 10 contracts. If you buy XLK, you buy 1 contract, but you always trading in $10,000. I think this is the most important rule, and this is the most common mistake among all the option traders, is that the size, they don't, inappropriate size, right? So, when I traded Apple it's not $25,000, it's only in $10,000, or $15,000, right? Instead of $25,000. So same thing. I was able to collect 40 cents and 40 cents, 80 cents. I closed it for 10 cents. I collected 70 cents on a $150 stock. I collected 0.5%. And you just rinse and repeat. And one lesson is that maybe I can trade Apple, right, on a $10,000 account, but I cannot trade Microsoft, or I cannot do the same strategy. I can trade XLK, but not QQQ, right? Because XLK and QQQ will move in a similar fashion, right? XLK is up 3.5%. And let's see, where's the spiders? The spiders is up 1.5%.